Welcome to All Things Policy, a daily podcast supported by Pragati, a flagship media initiative of the Takshashila Institution. We're a bunch of policy nerds based in Bengaluru, and we like to bring a fresh perspective to Indian affairs and an Indian perspective to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hi, and welcome to another episode of All Things Policy. My name is Anushka Saxena, and I'm a research analyst with the Takshashila Institution's Indo-Pacific Studies program. Today, we will talk about the fallout of the U.S China geopolitical rivalry in critical and emerging technologies, more precisely in the semiconductor industry, and its implications for the Chinese economy, for U.S investment in fabrication, and in brief, for India's PLI schemes. I have on the show with me Amit Kumar, my colleague from the Indo-Pacific Studies program. So Amit, welcome to the episode. For a light backdrop, will you please take us through some of the recent developments happening in the high-tech sector, which might be a result of the intensification of the US-China geopolitical competition?
Yeah, thank you, Anushka. Thank you for inviting. So there has been a lot of talk around decoupling with China and diversification of supply chains in the backdrop of intensification of the US-China competition and, of course, the pandemic-induced supply chain disruption. However, as we have argued in our recently published position paper on the Chinese economy, which our listeners can access to on our website, there is hardly any evidence of it on ground. If anything, what is likely is a China plus one strategy, where the investors are looking towards India and Vietnam, in addition to China, insofar as their new investments are concerned. However, the story is quite different when it comes to the issues of high-tech. We had an internal conference very recently at Takshashila, where one of our colleagues, Pranay Kotastane, presented a paper on high-tech geopolitics, also available at our website, wherein he argued that, and I couldn't agree more, that decoupling as a phenomenon is most likely to occur in the field of high-tech. And the reason why it is so is that of late, high-tech has become an increasingly securitized issue for major powers across the world. Yeah, so the US in its latest document also identified the four key areas of critical and emerging technologies where it could to have competitive edge over China and would like to widen the gap vis-a-vis China by investing more in them and restricting China's access to technologies in these areas. All these four areas, if you see, have a dual use applications. And among those four areas, computation and quantum computing have attracted the most attention. Consequently, we have seen the US taking steps to curtail China's access to cutting-edge chips and semiconductors, which is crucial to the enhanced computing capabilities. The result has been that in October 2021, the US added key technologies and Chinese companies to the entity list that prevents the export of certain technologies, machinery, and equipment to those Chinese firms involved in the semiconductor industry. Neither can they acquire these without the approval of US government. The restrictions were further tightened in December 2021 as new categories were added to this entity list. Then in October last year, the US came up with Chips and Sciences Act that sought to bring back key segments of semiconductor supply chain back to America. It offers incentives to companies to set up fabrication factories and foundries in America. Consequently, the TSMC, the largest semiconductor manufacturing company, which manufactures around 60% of the total semiconductors and around 90% of the high-end semiconductors, disclosed its plan to set up a plant in Arizona. The latest development include a trilateral deal that we all saw, a report that was broken by Bloomberg, I guess, between the US, Japan, and Netherlands, details of which haven't been made public so far, to restrict Chinese access to lithography equipment like deep and extreme ultraviolet lithography equipment, which are used in the manufacturing of semiconductors. So this is a sector that where these three countries completely dominate the market and will have a bearing on Chinese plans to attain self-sufficiency.
Right. Clearly, chip making tech is at the cutting edge of present and future of both civil and military and or quasi-military applications, which bears testament to why this has become a securitized issue, as you mentioned. I mean, we see this with Huawei and networked technologies as well. So the US's concerns around Huawei spying on citizens became more aggravated when the company was rumored to be establishing its network equipment around US missile silos and subsequently became a target of FBI investigations last year. Moreover, as we observe US rivals move towards informatization and intelligentization of their armed forces, say in the Chinese PLA or in Russia's precision strikes in Ukraine, the US becomes more incentivized to expand on both domestic measures like its export controls and quote unquote unverified lists to block access, as well as more global efforts like the trilateral deal you mentioned to kind of corner and confront China. But as I also understand, the semiconductor supply chain involves a whole lot of complex sectors and segments. You talked about lithography, and there are other kind of elements to this assembly line. So, would you shed some light on this for our listeners? And is the decoupling, given the interlinked and complex nature of supply chains, even possible? I mean, you mentioned in brief that if decoupling is to be seen, it will be seen in high tech, but how plausible is it?
Yeah, quite right. The supply chain involving the semiconductor is quite complex and is spread across multiple continents and countries. Broadly speaking, it comprises of three levels or stages. The first being designing, which involves, as the terminology suggests, designing of the chips. The companies involved in this sector are called fabless semiconductor companies, and these are majorly concentrated in the United States. The second stage involves the manufacturing of the equipment called the lithography tool, which we're talking about, which are used to put the design on the wafer. The sector is mostly dominated by the Netherlands, which houses the ASML, which has a sort of monopoly in the manufacturing of the high-end lithography tools. Other players in the market are Nippon and Tokyo Electron from Japan. There are also few US-based companies as well, which are a player in this market. These three countries completely dominate the sector. After this, at the third stage involves the manufacturing of the semiconductors, its packaging, assembling, and testing. This segment is quite distributed and mostly concentrated in East Asia, which accounts for around 80% of global fabrication. Countries include Taiwan, China, South Korea, Singapore, and others. Of course, there are also raw materials and human capitals involved in the supply chain. So, given this huge spread of the supply chain, it is really costly affair to attain self-sufficiency, as each country has some comparative advantage in the respective segment that dominate. But if you compare the US with China, the latter would find it far more difficult to attain self-sufficiency, given it lacks expertise in designing and the industrial base for manufacturing of lithography tools. It is totally dependent on the US and its allies and countries like Netherlands and Japan for the latter. At present, its only comparative advantage lies in the manufacturing of chips, its assembling, and packaging. Even here, also, it faces stiff competition from other players in East Asia. The US, on the other hand, appears far more determined to exclude China from the chip ecosystem and also looks prepared to bear the associated cost, since it already dominates the designing sector and can look for countries like Vietnam or India and even inwards to outcompete China. It is relatively easier for the US to sort of achieve this decoupling. Of course, it would require the cooperation of other companies and domestic companies and its allies.
Right. So you mentioned that the US looks prepared to bear associated costs, but there will be huge costs associated with this. I remember we discussed the example of Intel at the internal conference you talked about, and we concluded that even though Intel had plans to open up a chip production factory in Chengdu, China, its plans were derailed by Biden's Chips and Science Act. And instead, it then decided to ramp up production within the US. Pranay used the word alignment for this. He mentioned that we'll see an increased alignment between private companies and their governments. But I would say it's a little more coercive than that. But then again, given the environment of competition and given the fact that the company would still have its bills paid, whether in China or the US, it is also a power move taken in legitimate national interest. At the same time, however, the opening up and operating costs would have been much lesser for Intel in China than they will be in the US. And so I guess my question here is that are companies and countries ready to take the losses that emerge from this? And if yes, why is that the case?
For now, it seems that, as you said, US, as I mentioned, US is ready to bear the cost as it regards the issue is closely linked to its security. And yes, it will be challenging to compel American companies to align their interests with the government, but we are already seeing signs of it, right? As you mentioned, the example about Intel being one. So once the US companies involved in the supply chain agree, the US has the capability to compel any country owing to the preponderance it enjoys in the designing and equipment supply chain. An official from TSMC, while speaking of the US, said, if I remember correctly, and it's not an exact quote, but he said something like, the US is like a landlord and you cannot go against its wishes, even though China is the largest market for semiconductors. So US really in this segment is like a landlord, which enjoys preponderant position. South Korea and Japan are facing tough choices, but Japan seems far more determined and is far more convinced. South Korea does not have much of an option but to sideline with the US on this. Again, given the power that the US enjoys in this industry. Although it remains to be seen as how things would play out eventually. The solution, I would say, probably lies in relocating the foundries that currently operate in China and those that are operated by Taiwan, Japan, South Korea. As discussed above, China's role in the semiconductor supply chain mostly lies in the manufacturing, packaging, and assembly, and the testing of the semiconductors. So, and this is what we may see, right? Companies choosing to relocate to other areas, India and Vietnam emerge as viable destinations. But even as we saw the case wherein the TSMC announced a plant in Arizona, so US might also be looking inwards in this case. So yeah, it might be difficult, but once this happens, countries and companies will not have much of a choice but to toe US's side.
Right. And again, on this private sector front, there is also a concern that in the US, costs of establishing a domestic chip production unit are higher because various levels of US government, national, state, and local have created diverse tax and regulatory policies that makes investing in new manufacturing capacity for, say, semiconductors incredibly difficult. China and South Korea, on the other hand, offer such companies tax credits and outsized deductions. China even goes so far as to free them of tax payment for 10 years since they establish. And in general, also, there can be an aversion among private sector companies and stakeholders to invest in hardware more than platform and software because of massive opening and operating costs. So, can this be seen, if I may say so myself, as the undoing of semiconductor innovation in the US? In the sense that, can the US match China's benefits and funding for the hardware and production components of the semiconductor supply chain, despite its edge in fabless design?
Honestly, it remains to be, I would say, it remains to be seen. As per the stats, Semiconductor Industry Association's State of the Industry report from 2021, if I remember correctly, there was a reduction of 25% in American investment in the domestic chip production since 2000s. So it would be important to invest in hardware entrepreneurship in the US. And I think that is what we are seeing, right? The coming in of the Chips and Sciences Act, wherein the US has realized that it needs to invest more. And the private sector will have to be incentivized and encouraged by means of tax breaks and offers upfront reductions. And this is what Chips Act does. What it offers is, in this regard, is tax credits amounting to 25% of the qualified investment related to an advanced manufacturing facility. That is a facility with the primary purpose of manufacturing semiconductors or semiconductor manufacturing equipment. More can be done on this front, including also discouraging bad market activities like stock buybacks and putting a lid on capex and R&D funding.
Okay. And just to come back to China, we established that China's competitive advantage lies in the lower end of the supply chain. And China does not have the competence in designing the chips or manufacturing of the lithography equipment or the companies that manufacture chips. The US and its allies control all of these. So China only comes in the manufacturing of these chips. And of course, it also has an emphasis on self reliance in the face of intensifying competition. So, amidst this kind of dilemma that it faces, on one hand, achieving self reliance, and on the other hand, having to face competition from the US, how is China responding? What do you think the policy shift looks like on China's trajectory towards, say, make in China or towards attaining overall self-reliance in the industry, given that it does not have competitive advantage in all of these other assembly elements of the semiconductor supply chain?
I would say there's a lot of unrest and anxiety within China. If you see CPC's official releases and even Xi Jinping's speeches, for instance, at the recent Politburo studies session, The science and tech industry has received quite a lot of attention. There are talks of foreign attempts. The report referred to foreign attempts to strangle China's science and tech industry, and the emphasis on quickly attaining self-sufficiency in this regard as a result of this threat, geopolitical threat. So, and recently, if you look, China has filed complaint against the US at the WTO, accusing it of adopting protectionist and unfair policies. So these are the two broad responses so far we have seen within China. Besides, if you look at the Chinese media houses, they are consistently raising their voice against the US export control measures and trying to knock some sense to the Biden administration. And they've alluded to the fact that China is the largest market for semiconductors and that these measures would hurt the US companies, US allies, etc. Besides, there has also been a lot of about attracting global talent and especially capturing Chinese overseas talent in science and tech. So these are the kind of responses that at least I have seen within China.
Right. Now, who says China doesn't have any soft power? They have enough soft power to try and influence policy in the US. But of course, investments in these policy responses must also be taking a toll on the Chinese government's pockets. So must be the export controls and any future loss of investments and investor confidence resulting because of it. You mentioned US companies are looking at a China plus one strategy where they might want to hold off pulling out of China, but they might also redirect their future investments to other countries. And of course, this is bound to generate more anxiety, as you mentioned, within China. So how do you think the Chinese economy will be impacted in this light?
In the recent year, China has laid down, if you have followed Chinese communiques, you must have noticed that it has laid down, there's a lot of talk and plans about innovation-led growth, to offset the downturn in growth due to slump in consumption, reduced exports, and an aging population and demographic problem that the China is facing, and so on. And if this US-led attempt towards decoupling in the high-tech sector materializes, I think it would be a huge setback for the Chinese planning and economic policy. Secondly, a point that I would like to make is I feel that free and open flow of labor would be the next target of the US restrictions. Facing pressure from the US and lacking the capabilities, and compounded by the fear of losing this war with the US and the fear of falling behind, it is only logical to assume that China may resort to IP theft and stealing talent. Already, we talked about the emphasis that has been laid on attracting global talent. And even otherwise, if the US wants to restrict China's access to cutting edge technologies, it will have to restrict free flow of Chinese labor into the US led tech ecosystem. So, and Chinese will also coerce their domestic talent pool and curb their movement to the US to sustain their science and tech industry, leading to the introduction of restrictions on Chinese nationals in these sectors for security reasons. And this has a consequence for India as well. There'll be a lot of investment in the sector driven by the desire to maintain, retain, and expand the competitive advantage by the US vis-a-vis China. And this will require talent, The dual effect of the curb by China on its domestic talent pool and the US restriction on Chinese nationals in these sectors will free up space for high-tech opportunities that given that the Chinese contribute significantly to the global talent pool in the sector. And this will be one place where opportunity for India will lie. Other opportunity might come in the form of new foundries if the companies do agree to relocate their operations.
Right. And India also has, correct me if I'm wrong here, India also has a robust production linked incentive scheme going on this front. Like the last year, it announced a $10 billion Semicon India incentive scheme for various stages of semiconductor assembly, like research and design, wafer manufacturing, semiconductor packaging, and so on. It even had a PLI scheme going on for chip parts for automobiles and EVs, but the former closed down last year, I think, with no high-end results. And so I think, as we already concluded, the semiconductor industry supply chains are interlinked globally and vastly spread across geographies. Even though India has a push on Atmanirbharta, semiconductor chips is a vertical that would be hard to achieve it in. And so the recently released research note by SBI, which says that our PLI scheme's name to fame would be to enhance self-reliance and reduce import dependence on China, should also be taken with a pinch of salt. And as for talent, I think it's a vast field of opportunity for India, but developments remain to be seen. Anyway, that was quite a fun chat. Thanks, Amit, and thanks to our listeners for tuning into another episode of All Things Policy.
My pleasure, Anushka.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app, ivmpodcast.com, or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVM Podcasts on Twitter, Facebook, and Instagram. And hey, if you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.